Welcome to Looking at the Markets with David Modell. Today I'm going to give you some basic information on how to read a stock chart. And this is another video in my series, Investing for Beginners, where no question is too beginnerish and you should never be embarrassed or afraid to ask basic questions about stocks and charts and investing, trading, things like that. And if you have more questions about it, something that is not covered in this video, you can or if you just need to review or you want some help putting together a trading or investing plan, because you really need to have a plan if you're going to succeed at this over the long term, you can email me at any time. My email address is right down there below on this video. It is davidmodell@gmail.com. All right, so how to read a stock chart. Maybe you've seen stock charts and you're confused. It's okay. We'll start you at the beginning. So one place I like to go is Yahoo Finance, and you can visit there. It's just finance.yahoo.com. Another good one is Google Finance, which is finance.google.com. That's how you get there. And there are other websites that have charts as well. So those are just two of them. But let's say you're using Yahoo Finance just as an example, and you can type in, you can go to the search box, type in your favorite company. It could be McDonald's, Disney, Coca-Cola, whatever. It could be Apple. Let's try Apple. Let's say you type in Apple because maybe you don't know what the ticker is, and the ticker is the stock symbol, but it'll probably figure it out, and you just click on the one that you think is right, Apple Inc. A lot of times it's the first one that pops up. And then you scroll down a little bit and you can see the price of Apple stock. Right now, if you were to buy one share of Apple stock, it would cost $191.70. And as you can see, there's a chart there. And that chart, it shows 1D. Well, that means 1 day. And so this shows the price during one trading day, which if you're in the Eastern time zone in the United States, that would be the trading day. And by trading, I mean this is when most people buy and sell shares of stocks. And so that trading day is on the New York Stock Exchange, which is the most popular place where people buy and sell stocks in the United States. The trading day opens or starts at 9:30 a.m. Eastern Time and closes or stops at 4 p.m. Eastern Time. And so this line here shows the price. All right, it started up here, and it actually shows it on the right side of the screen. It started the day at $190.89 for one share of Apple stock, and then the price went down and then went up and down. And over the trading day, it tilted upwards. It slanted upwards a bit. Not a huge price movement. But what's interesting is, since it does look like it went up, how is it possible that it's down for the day? It's down 0.91%, or $1.76 per share. How is that possible? Well, if you click on 5D, see 1D represents 1 day, one trading day of price action for the stock shares. If you click on 5D, that represents 5 days. It shows what happened the last 5 trading days. And trading days do not include weekends or certain major holidays. The New York Stock Exchange is closed. Well, take a look. Over the last 5 days, the price started here at $192.80 or so, and then it chopped around, okay, kind of went up and down, and then pretty much went sideways. Not exactly sideways, but relatively sideways. But then here's the end of the day. On Thursday, I should say the end of the trading day at 4 o'clock Eastern Time, 4 p.m. And then what happened was, you see, just because the regular trading session ends at 4 o'clock p.m. Eastern Time on the New York Stock Exchange doesn't mean that all trading halts completely. It is possible to buy and sell shares of Apple stock and certain other stocks after 4 p.m. In fact, a lot of people trade until 8 p.m., 8 o'clock p.m. Eastern Time, and that is known as after-hours trading. And also, for people who wake up very early in the morning, there's also pre-market trading, and so it's possible also to trade the next morning before the regular session opens, before 9:30 a.m. Eastern Time. And so the price can move around, especially if there's bad news that happens after the market closes or before the market opens the next morning. If there's just bad news about Apple, let's say overnight or in the early morning session, that can cause the price to drop. And then when you wake up the next day and it's 9:30 a.m. Eastern Time, the price is lower than where it closed or ended the previous trading day. And so that this would be called a gap down. All right. Whereas if let's say if there was really good news about Apple overnight or in the early morning, it's possible to have a gap up where the price can actually open higher than it had closed at the previous trading day. So that's how it's possible. You see, the next day, it's possible for the price to be significantly lower than it closed the previous day. And so even though the price went up throughout the day, it still closed lower than it still closed today lower than it had closed the previous trading day. And that's how it's possible that the stock share price is down even though it drifted upwards throughout the day. It still closed or ended lower than it had closed or ended the previous trading day. So that's an explanation for that. And as we can see, the price pretty much is lower, even though it drifted a little bit upwards throughout the week. There was that big gap down there, and so it still closed lower than it had opened over here. We can click on 1M, that represents 1 month of price action. And we can see there was a lot of sideways chop here, as they say, and then a big up move, and then more sideways chop around. Okay. You can look at 6 months, and you get a bigger picture. I recommend looking at multiple time frames when you're assessing or evaluating a stock. All right, so we can see, okay, it went sideways and then down, then right back up, sideways, down, right back up, and up a little bit. So it's pretty much trended gradually upwards for the last month or so, or I'm sorry, for the last 6 months or so. YTD, that is year to date. And so you can see the price action of Apple stock shares starting from January 1st all the way through today. 1Y, that's 1 year. And you really get a nice big picture view of it when you pull back the chart, so to speak, and look at the longer time frames. Like 1 year, you can see that, you see, if you just look at 1 month or 5 days, you see, if you just look at 5 days, you'd think, oh, Apple stock is not doing well. But then when you look at 1 year, you can see that over time it has been doing well. It's had some dips, but it recovered from pretty much all the dips here. 5 years gives you a very long-term time frame. Okay, and you can see there was a rough patch here, but over time Apple stock did go up. And then Max goes all the way back to the 1980s, back to 1980 actually. Now it's possible for a company to exist before the stock exists. Companies don't always put out a stock immediately, and that's called an IPO, initial public offering, when a company starts to offer shares of stock that people can buy and sell. All right, and let's go back to, let's say, 1 year or 6 months. You'll be able to see these. There we go. You can see it more clearly on the 6-month chart, and you can see these little bars here. That's volume. What volume means is how many shares of stock were traded or bought and sold. So when there's a big bar here, a large one, that means that there was a lot of volume. So a lot of, at that time, many shares of Apple stock were being bought and sold at that time. Now it's red, and so that means that the price was going down. But you can see the volume was going up. And so that means there was heavy selling, as they say, a large volume of shares being sold. And so some people would say that when that happens, that the price might continue to go down after that. But that prediction is not 100% true all the time. And so here we have actually not much later than that, we have a large green bar there showing the volume. And so you have heavy volume here, a lot of shares of Apple stock being bought and sold, and but that green bar means that the price was going up at that time. And so some people might predict after a large green volume bar that the price might continue to go up after that. But again, that's a prediction that is not 100% true all the time. Now, if you're just starting out, I recommend that you start out with a line chart. I think that's the easiest to read and understand for a beginner. On Yahoo Finance, they have area charts, which in red-green areas, which look kind of like, I don't know, mountains maybe. That might be harder to read for some people. And then you've got candlestick charts, which are more advanced, and I recommend getting involved with those later on when you get more advanced, because they do give more information with the candles than with the line graph here. And I have videos on how to read candlestick charts, so feel free to read those. So this was a quick introduction on how to read a stock chart. There's a lot more to learn, of course, but I think this will help to demystify the chart and to make it a little bit more understandable for you. If you like this video, please give it a thumbs up on YouTube and leave a comment. And please subscribe to my YouTube channel if you haven't done that already. And hit that bell on YouTube so you can receive the latest notifications whenever I put out a new video. So, and as I mentioned before, you can contact me if you have questions, if you'd like some help putting together an investing or trading plan, maybe you have questions about stocks, stock charts, stock fundamentals, anything like that. You can email me at any time. My email address is right down below. It's davidmodell@gmail.com. Thank you so much. I really appreciate it, and I'll talk to you again soon.